Good afternoon. I'm Dan Fitzpatrick here at stockmarketmentor.com on Thursday, June 5th. Sending this out a little bit early, but I wanted to point out Broadcom. By the way, members, we got a lot of price alerts that were triggered, and so I'm explaining those in today's video. A lot of them are actionable right now. Okay, so Broadcom, what the heck are you going to do with this? I was looking at this and, true confessions, I decided not to trade it. For a lot of different reasons, mostly just because I didn't have the time to babysit it. Because you look at this, first day here, it gapped and crapped a little bit, pulled back. So this tells you, probably gone up too much, need to back off. Then the very next day, this is where I was thinking, okay, this is kind of a, this is a potential trade, but I just don't have time to sit here and watch it. The trade would be if the stock, on this second day where it gapped down just slightly and then closed near the high of the day, if the stock moves up above the high here of 36.05 on this day, this means everybody, all the knuckleheads, even the ones that bought at the top, they're all winners because they bought down here. And those that shorted the stock, and there'll be a lot of those because that's what happens when a stock really gaps up. You get a lot of professionals who will say, well, there's a lot of demand, I'll fill that demand, and then I'll buy it when the stock goes lower. But they tend to be really disciplined. If the stock starts trading above the high here, they're going to start covering. So my thought was, if the stock does trade above there, then go ahead and buy it because the stock's going higher. Okay. Well, we can see that's what's happened. It's not like a huge move here. Almost 5%, from this high, which is great. I'll take a 5% move any 2 trading days without a doubt. My point for doing this video is I just want to point out this type of analysis to you and give you the rationale for it. It's not just, hey, make this trade. I want to help make you a better trader. But so when you see a stock gap up like this and then ultimately break to higher highs, it's really a buy signal. Now, at this point, you say, well, do I still, hey, man, is it too late to buy Broadcom? Couldn't tell you. I don't know how high the stock's going to go, but I know this. Volume is declining, which isn't surprising. You look at the volume here. Overall, though, look at the volume bars relative to the rest of this here. So this is still really, really high volume, which is a good thing. It actually kind of gives me the sense that we'll get even higher prices. But here's how you stay in the trade. Look what happened at the low here. Very next day, higher intraday low, higher intraday low, higher intraday low. We've also got, once we get this breakout, we get a higher intraday high and then one above that. So my suggestion would be look at the intraday low of the last full day, and here we're still making this, but you look at the intraday low of 36.79. You stay long this stock. Stock's at 37.79 now. You set a price alert for a little under 36.79, and you're risking $1 for the privilege of staying in the stock and hopefully making more money. If the stock instead reverses and stops you out, that's fine. You gave back a little. You gave back a little of your profits, but that's why they call it speculation, not sure things. So you always have to risk giving back some in order for the possibility of making some. So anyway, I hope this helps. Broadcom, really screaming stock. It was a little bit too high maintenance for me to make this trade, but this is the type of trade that you can make on these screamers. Oh, by the way, if it doesn't break out above that high, well, then don't make the trade. Don't forget about that aspect. Okay, members, over to the strategy session.